Okay, everyone, how's everyone doing? I'm J Pinkert. Let's start off with looking at some of the, hey guys, start off looking at some of the outside markets with the risk-off trade. Risk-off trade being pronounced in a big way. This is your TLT. Hello, Fib Nacho. So we've seen this move up in treasuries. This is the Treasury TLT, 20-year Treasury bond index, making new highs here, but diverging. We talked about a possible bond top a few weeks ago here. We said that blow off towards 125 or so was possible. The rubber band's stretching even further than I thought. We're in a blow-off stage here, but still diverging in the bonds. What currency pair do we pay attention to when we're looking at the bonds? Who knows? Which currency pair is significant if you're watching treasuries? US dollar yen. Adam had it. Yep. Okay, you guys know. Is the yen making new lows yet? Not yet, is it? It's getting there, but we're not there yet. Okay, part of the reason for this risk off, of course, the linchpin has been equities. Here's the S&P chart. Had a little bit of a reversal today. Of course, you could throw your charts away tomorrow morning for an hour or so. After the release of the NFP, the market's expecting 150. So anything more than that would be a positive surprise, disappointment, and we most likely break down and we'd be heading towards 1270 to 1250. If we're able to maintain this low on a closing basis, you can make a case for the market rallying back towards 1350 to 1360 before it ran into any trouble. I would expect the dollar to weaken during a scenario like that or continue to strengthen on a washout to new lows on a disappointing number. Commodity markets remain under pressure because of the strong dollar. Here's your crude chart. So a lot of these markets that have been declining for the month of May, it's hard for me to want to get short crude after a $20 decline during the month of May. Hard for me to want to get short gold or silver here, even copper. Just like it's hard for me to get short euro here, long the dollar here. I think we're close to at least a short-term inflection point, but I could be made to look all wet tomorrow on the NFP number. Here's your copper market. Again, making new lows. So I'm sure there's people that have been in my webinars that know or watch my videos. When we were up here, my target in copper was 335, 340, 330. We're right there. So to me, this is not a time to get short copper, get short crude, get short gold, get short Aussie, get short euro, get short the pound. Maybe not necessarily time to buy them for a reflex move, but that's what I'm looking for. If anything, if you're long-term bear in equities and everything else, you wait for a recovery to sell into it. I wouldn't be doing it in the hole here. Just like the bonds may have more left in them, but I'm not going to reach up here and get long bonds during a blow-off. If you guys are with me on this and understand that psychology and rationale, can you give me a why? So I know I'm reaching you. Okay, good. Well, Lopez has been listening to me sing this tune for a couple of weeks now. Okay. All right, let's move to the pairs. Let's start off with USD CAD. It's had a decent move. I mean, I wouldn't say an earth-shattering move, but off the lows, we've rallied a little over 500 pips. USD CAD from the low of the 98 range, we've had a little over a 500 pip rally. This new high here is diverging. It's a shade over 70 on the daily, but it is diverging. I think there's a fib retrace coming back here, anywhere from 38.3 to 61.8. That's going to take Canada back here where it would be a better buy. I like to hear the ice crack, so I've tried shorting it a few times, looking to do that again, looking for this pullback. We have divergence on the daily. We need a down close. We have it on the 4-hour. We had a confirmed high on the 1-hour, so, you know, it is possible that it could make another rally attempt on some bad news tomorrow and then reverse. Okay, so what I ask myself when I look at this chart now is, you know, where are the stops? You have a lot of dollar bulls right now, so, you know, there aren't that many stops above the market. I guess you have to go to a weekly to you know, start finding them. You know, we talked about Canada being a buy. I was looking for sub 98, 97.60, but it bottomed just at 97.99 on this platform. But for the most part, we've taken out most of the shorts, unless you're looking at these highs. And it's my contention that the vulnerable side of the market now is on the long side, where you're going to have stops here, you're going to have stops here, you're going to have stops here, you're going to have stops here. Maybe you have some people top picking, you know, looking for tops like I am, and there might be some stops over today's highs, and maybe they have to be taken out first. But to me, it's late to be looking at Canada, and considering the decline we had in Aussie and Euro and the British pound, a 500 advance in USD CAD with crude breaking over $20 plus, which it is correlated to, and the S&P breaking 7-10%, it hasn't been that impressive of a rally. I'm not saying it wasn't a good rally and you couldn't have made money being long, but when you look at it in the big scheme of things, it really wasn't that huge. For example, Euro took out the January lows, right? Euro took out those lows. Canada has not even taken out these highs yet. So if I'm bullish Canada, I'm looking for a pullback. I'm figuring 101-ish. That's my take there. My take is pretty much I'm looking for counter trend trades across the board. I've been early trying them over the last week or so. Doesn't mean that I'm going to stop doing it. Sometimes it takes more than one swing of the bat to hit the ball. You know, you're given 3 strikes before you're out. I think I only have 2 strikes on me right now. So I'm going to be looking to top pick Canada. The British pound, we talked about all the sell stops that were going to be there all the way down. Talked about it being a rising wedge and that there was potential for it to make a round trip back down to the 154 level. We're there now. We have a little bit of a throw over right here. And I'd be looking for a recovery in the pound, probably back towards the 158 level. So I'm looking for counter trend trades here. although I think the euro may outperform because of how with the euro making new lows, EG did not make a new low. So the low in euro pound was back on the 16th, so we're near the end of the month. The euro has made, since the 16th, here's the 16th, right? We've made successive new low, new low, new low, while euro pound is not making a new low since the 16th. So that tells me to favor euro on the long side. Under the weekly wedge, well, the wedge really was from here, from the 52 level, okay? This was a wedge. This was a throw over. This is called a megaphone formation, a broadening top formation. We had a throw over above it. Now we're having a throw over underneath it. The bigger wedge on the weekly. Here you go. You must be talking back from where? Monthly? I guess you could call this a wedge. It's much more classic on the daily. That's a pretty classic wedge formation. And wedges retrace how much? They retrace how much of a move? 100%. So pretty close to 100% here. Maybe we're going there for a third drive to a bottom down under the 152 level. It's possible. I can't get short down here. I couldn't get long up here. I was trying to short it in here. Okay. Euro, similar picture. We're getting some divergence on the 4 hour, on the 1 hour. And perhaps one more low, give us a 3 drive formation, perhaps one more low down here. But I'm looking for a turn in euro and some type of recovery, most likely back towards the breakdown, maybe 126 back to this low. I can't get short. There is no divergence on the daily. There is on the 4 hours still. So maybe back to the 50-day moving on euro. Yen, all right, just keep in your head what we saw happening in bonds. Yen is still not back to the low of the move. I think we're approaching 78.6 fib level between here and 77.50. But I'm thinking this is time to be considering looking for longs in the US dollar yen. I think they've taken out most of the sell stops on the way out, people that were long, people that kept trying to bottom pick it. I think they're capitulating here. And if this is a wave 2, there's a big move to come, which means risk is going to come back to the market. So I've been talking about this with our membership, is that actually the markets in many ways remind me of a song. You guys know I have a reputation for singing. Don't worry, I'm not going to sing. But if you take a look at what's happened in the markets, right? What's been happening? Okay, you get the point. Anyway, flying high in April, shot down in May. The people who sold in May, they did the right thing. They made a fortune or saved money. The other part of the expression is sell in May and what? What comes after sell in May? Sell in May and go away. So that's right. So the possibility is that we have a big recovery in equities, pull back in the dollar, and risk comes back for the summer. And there are very few people thinking that could happen with the fundamental situation on the ground in Europe. And the weakening economic statistics and all the bad news makes it hard to see how it could happen. Okay, let's move on to the pairs. So again, yen and bonds, keep an eye on the yen. We start trading back over 80. That should be a pretty good indication that we're going to head back up and test the highs or go higher. I think there's a significant buying opportunity setting up on the long side of yen. Moving over to the commodity currencies. We've had some nice divergence on the daily with the Aussie. Here's your second drive. We're diverging on the daily. They've taken out where are the stops? There probably aren't many sell stops. I'm not saying that we can't go down, but most likely there aren't many sell stops, right? You know there's a ton of people short Aussie. You think there's some buy stops here? How about here? How about here? 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 So right now I think that the short side of Euro, short side of Aussie is a very crowded trade, and it's not going to take much to create some type of short squeeze in both of those pairs. So I'm looking for reasons to go long and take advantage of people that got in these trades late. Because most of the stops are not underneath the market anymore. I think we've taken care of people trying to bottom pick the Aussie. I've done it unsuccessfully on this decline. So now there's not a moving average or anything that's bullish right here. The only thing that we're seeing for possible hope is sentiment. The commitment of traders shows some positioning that is extremely, on a contrarian basis, favorable in the Aussie. So I'm looking for recovery in the Aussie. Same with its sister Kiwi, not acting as well. And the inverse of the Euro is a Swiss. I'm thinking that we have it diverging on the 1 hour. On the 4, and still pretty strong reading on the daily. It's actually confirming the high. But I think that there's a pullback coming in Swiss that initially could take this market back down to these levels, back down towards 95 and a quarter or so, and potentially back to these lows, 93.60. And that's where I stand going into the NFP number. So if you're trading the NFP, reduce your leverage, trade with wide stops, or the smart play is just to wait for the number and react and put your plan together after that. Any questions on anything I've covered here today? Any pairs that I haven't covered that you'd like me to take a look at for you? If not, I invite you to send an email to Greg at CTU Corp for a free trial to be in our Trading Room US session. Thank you for your attention, and hope I opened your eyes to some things. Okay, Don. That applies to you too, Don. Okay? For the next one, okay? Okay. You're welcome, everyone. Good luck tomorrow. Adios. Thank you, Ivan. Thank you, Adinda. Adios.